This is Wilson from Own Real Estate giving you a market update. First, I wanted to express gratitude, happy Thanksgiving week, and also happy holidays. In front of us, first chart is going to be the listed sales price in San Mateo County. It is so far November to date. We have 21 days throughout the month, and the first month we've seen a listed sales price below 100%. I believe the last time we saw this was during COVID, the first shutdown. Other counties in San Francisco, we are seeing roughly 102 listed sales, but it's been a little bit higher the last couple months, so we're also seeing a trend downward. And so far in Santa Clara County, it's been consistently right at or above 100%. In Contra, Costa in Alameda County, we are also right between 101 to 100%. And now inventory and sales is the big thing that we wanted to talk about this week. So we're seeing a trend downwards of available inventory for sale across all counties. And then we're seeing, in terms of a full month of data for October of 2022 compared to October of 2021, about a 39% decrease in total sales from 2022 October, 3,546 sales compared to October last year, 5,802 sales. Now, inventory, as long as it doesn't increase, we know that there's less buyers in the market right now, and that's why we're seeing a trend downward of total sales. Now, if we look at the nationwide data, nationwide total number of sales is down 28.6% across some major metros that are tracked in this chart that I'm sharing here. This is expected to continue to go down because if you look at year over year from month to month, the markets have seen an acceleration of less sales respective nationwide. Prices is the big question as well that a lot of people have. Currently, the median sales price for anything across the Bay Area is 1.16, and at its peak in April was 1.388 million. That is a 17 rounded up percent decrease in prices on average across the board. Some markets, they've decreased further. Some markets, we've seen less of an impact in terms of median sales price decreases. Now, additionally, I wanted to review the economic projection for the Fed funds rate. It looks like they're projecting 2023, it's going to peak for the Fed funds rate at 4.6 and decrease further in 2024 and 2025. Now, keep in mind that even in 2025, if it's lower to 2.9%, that's 2 full years away. We started last year at a 0% Fed funds rate. One thing I wanted to highlight as well is on the bottom of this table here, you can see the shaded areas indicate a U.S. recession. Now, what it's suggesting is the Fed is already saying we are in a recession and suggesting that the recession will end in sometime 2025 based on this projection. Now, just rules of thumb, this is an estimation, a suggestion, and a projection, but this is saying that we are currently in a recession based on what we're experiencing right now. Lastly, as we've visited SF Standards, San Francisco Company Tech Layoff Tracker before, we recently went through some major layoffs, especially at Meta, and also you're starting to see more documentation of other San Francisco-based tech companies that have gone through layoffs and obviously their reasoning. Most of it is obviously related to what's going on in the market with less funding, less money out there. Tech companies are needing to make a switch from revenue and growth to profit. Hopefully you found this market update helpful. If you've seen other data that you would like to share with us and we can share with everyone that's watching this, would love to include that as well. And once again, happy holidays and enjoy Thanksgiving week.